share of the private banks will go up from 30% to 50% in the next 5 years. That's a very, very dramatic statement. 1 minute. Because historically, the private sector nibbling away at PSU bank share has been at the rate of 1% a year. He's saying 4% a year. In other words, quadrupling of the rate of market share change. That's a very significant statement he's making. That means that while all this is happening on the ground, there's lending happening, and the lending is being done by strong private guys like him. The PSU banks have a lot of social goals, which includes banking for people who are underserved. So that's valid. But I think this is where the technology comes in. When you bring in technology into banking, earlier, let's say you had to open a bank account, it took you 1 week. You had to get all kinds of paperwork, this, that. It cost you, say, 500 rupees per bank account. Now with Aadhaar KYC, you reduced it to 2 minutes, and the cost is 10 rupees. So suddenly, your banking also becomes inclusive because technology has lowered the cost of opening accounts. So I think a lot of financial inclusion will happen because now more banks can be run profitably and sustainably even at low transaction cost at scale. Because banking is going to move from high value, low volume, high cost to high volume, low value, low cost. Like mobiles did. The great revolution in mobile. Why does everybody have a mobile? It's because I can recharge 10 rupees. So you're going to reach the same thing in banking, where you will start using digital payments for a 10 rupee transaction in a Panwala thing.